Been in this business a long time, guys. I just put out a post recently. Just today I mentioned, the first trade I ever took. Now this is before many of you were born, right? First trade I ever took. March 1981. I was so nervous. I'll tell you a quick story, very funny story about it. So I take my first trade ever, 1981, and I'm debating with this first trade. Do I just empty everything in my account and just use all the money to buy Eli Lilly is the name of the company. It's a huge drug company here in the United States. It's called Eli Lilly, right? So that's my first trade ever. Symbol LLY, right? So check this out. So I'm debating with myself. Do I use everything I have in my account, my little account, to just buy Eli Lilly and just buy as much as I can and I have zero left in my account? Or do I only buy a portion, do I only use a portion of my account to buy some less shares of Eli Lilly and leaves a little bit of cash left over? So I decided to use everything I had in the account to buy 12 shares of Eli Lilly. So I was thinking, like, do I buy 10 shares and like leave a little bit of change in the account? Or do I buy 12 shares of Eli Lilly and just empty the account? I chose to just go all in, 12 shares of Eli Lilly. First trade, March 1981. I remember it like it was yesterday. Crazy. Funny story, right? December 5th, actually, of 1986, my first day as a professional trader. It took me nearly 6 years to really get this to the point where I could do it professionally. 6 years. Wow. Hard years, guys. The hardest years of my life. I've never had years that hard. But you know what? I'm glad I got those years out of the way early. I was young. I was in my early 20s. And I've constantly said I lost my 20s to trading development and being so focused on my first phase as a professional trader. I lost those two things, developing as a trader and the first phase of being a professional trader and building my trading career. I lost my entire 20s to that. So what do I mean by that? What do I mean by I lost my 20s? I did not do parties. I did not go out. I did not drink. I took my first drink at 33 years old. I did not hang out with friends. I focused. I did not live the typical life of the young 20-year-olds. You know, I did not go to gatherings. I didn't have a lot of friends. Crazy. I was 1,000% focused. Now, I'm actually not saying that that approach is right for everyone because it's a bit extreme. In fact, in a way, it's insane. I hope I didn't lose you. In fact, in a way, it's insane. And I don't know if being that insane, being that focused, where you dedicate a decade to building, that you sacrifice everything else except that. that you become so single-minded in your purpose that nothing else in life matters. Not eating, sleeping, not anything. That's only for certain types, you know. But it was for me. When I look back on it, could it have been done differently? At that time in the 1980s, no. I don't think so, because there were no mentors, there were no teachers, there were no courses, there were no books. In a very real sense, I came on the scene in the 1990s and ushered many of those things in. The first international trading school for institutional traders and professional traders in the industry. The second direct access trading brokerage firm in the United States, the second largest in the United States. The first short-term trading service for the entire industry. I ushered many of those things in the 1990s, but these things did not exist for me. And you know what's interesting? The motivation behind creating these things for traders was because I wish I had what I decided to create. So my creations, the first trading service in the industry, the first one in the whole industry, the second direct access brokerage firm where traders had direct connection to the market, not through a broker, direct, second in the United States, and the second largest in the United States. I sold it, of course, but the first international trading school for professional traders in the whole industry. Think about that. One of the first authors of a day trading book in the entire industry. Go look at the dates and find another day trading book written before my book, my first book. There's none, or very few, let's say. I think there might be one. But anyway, you get the point. So all of these creations were driven by this frustration of mine. Why is there no help? Why is there no guidance? Why is there no one? Why is there no mentors? Why is there no school for this? Why didn't I learn this in school? And so I remember one day, guys, in my closet, when I was the most frustrated with myself and with my trading. I'd come home, because you know you had to trade in a professional office, right? You had to trade in an office. There was no trading at home. There was no direct access. It wasn't you doing the trades. You had to go to a place where you had order takers, and you wrote out buy and sell tickets, and went up to the desk and handed your ticket to an order taker. They would do the trading, hand the ticket back to you, and that was your price. And you looked at the ticker tape on top up there, like that. That was trading. But I was saying, when I would be the most frustrated, I would come home and go directly into my closet with my clothes and my shoes. Oh yeah, shut the door. I want to be bothered, total darkness. I remember one night in that closet, I prayed to my God. I said, listen, if I ever make it this, if I ever cross over, I will be a beacon light for traders like me. I will leave something behind. I will start a legacy of content, information, and training. I will leave something behind. I am going to dedicate myself to this so that people like me coming behind me had something to start with. It might not be total. I can't give you total. But every single day, I block out several hours out of my day to make sure there is a piece of content that has value, that is informational, that is uplifting and motivational, instructional, and that will help you take another step in your journey for professional trading. I do that every single day. It's in my schedule every single day. I don't produce bullshit. I don't produce videos on other people. I don't spend time on other people's page commenting about them. I don't do that. I spend time with my traders, and I spend time making sure I keep the promise that I made that very dark day in my closet. Every day of my life, I work toward that promise. That promise doesn't have a price on it. I'm not selling anything. I'm giving back. I'm giving back to the very industry that I helped create. All right? And I don't get distracted. Don't get pulled away. I don't let nonsense and idiocy and stupidity and intentional bad things, I don't let that affect me. Never, never in my entire life. Nothing reflected me. Nothing detracted me. Nothing stopped me when I was trying to do this trading thing correctly. Nothing. And I got a very interesting story for you coming tomorrow about my book. Groups of traders did not like me. Tried to get my book off the shelves, my first book off the shelves of bookstores. You know how they did it? In groups, writing negative reviews on my book. My first book that just came out, one of the most popular traders in the United States, and they attempted to take my book off the shelves by just constantly 24 hours a day writing negative reviews on Amazon. I'll tell you the story tomorrow. It's a funny story. Today, that book continues to be one of the most read purchases, trading books of all time. Nothing stops me. And so, guys, if you are not following me on my YouTube channel, if you are not taking that daily content in, I believe that you're missing out. I truly do. It is done from the heart. It is done from a promise to my God. It is done in a way where if you take it in every day, I promise you that it is impossible not to get better mentally, informationally, from a knowledge point of view, from an internal strength point of view. We do it together, and there's no price for that. Right? There are no other individuals that I'm aware of in this industry who's dedicated in that way. You understand? All right, guys, sorry for the preaching, but I got a little emotional about that. Every time I talk about beginning years and losing my 20s, and it's emotional. It's going to be emotional for you too, if it's not already. You know? What book? I have all your books. Awesome. Tools and Tactics. That's my first book, Tools and Tactics of the Master Day Trader. Oh, you thought I came out with another new book? No. 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 Guys, I tell you another funny story. I have a 5-book contract. I've had a 5-book contract for, like I have 5 books, right? But I have a contract for 5 additional books. And that contract, I'm like 15 years late. Like I'm literally 15 plus years late on those 5 books. My publisher's like, Oliver, don't worry. Don't worry, whenever you get to it. So there's like another 5 books coming, guys. It's just, my God, life is just so crazy right now, you know, crazy. It's amazing, you know, amazing. So guys, it's truly been a privilege, and it's kind of amazing even for me, like when I look back and I say, wow, like I was really at this early in the mid 1980s. Guys, you realize that being an equity trader, being a trader back in the early 80s was not cool. Like even if you were trying to be hired on Wall Street as a trader, everyone wanted to be on the bond desk. Bonds were where the big action was. That's where the big deals were being made. Equities were kind of passé. And if you got relegated to an equity desk in the early 80s, it was sort of like you didn't make the first cut, because all the first cut people made it to the bond desk. It's not until the crazy bull market of the 1980s that really brought equity trading back into vogue. And then the internet revolution, which was kicked off first by the small order execution system, which I was one of the first traders to ever trade on the small order execution system called SOS. We were called SOS bandits. The SOS bandits kind of led to new order handling laws in the market that gave all traders, the ability to trade directly from their computers. That happened in the 90s. In the 80s, no one could trade from their own computers. You couldn't place your own trades. That was against the law. Couldn't. There was no way to do it. And so early 90s, new order handling rules. I was right there. I traded on the first platforms that gave traders the ability to trade from a computer. 1994, I start my own trading firm, one of the first ones in the United States. Several years later, the first direct access brokerage firm, so not just a trading organization, but traders that were from all over the world could open an account with my firm and trade direct to the market without any middleman, without going through a broker. It was like you press a button and boom. That was rare back then. Second one in the United States, second largest one in the United States. Crazy. First service dedicated to helping traders pick the right plays every day for years, for 12 years. This service was on the desks of every institutional trading firm basically on Wall Street. Every major trading firm, every professional trader had my service. The popularity of me in the industry is what brought the book publishers, Oliver, you got to write a book. And that's how my first book came into existence in the late 1990s. It got published in 2000. And that's when some jealous traders in the industry was like, we're gonna take this book down. I'll tell you the story tomorrow. But it's crazy, like, to go back and think back over that history and all of the things that were done. You know, this was not the internet era back then, in a way. It wasn't Instagram. It wasn't Facebook. You just didn't document the way you document now. Like, if that happened now, that documentation of every step along the way would be there. I wish. But I still have some things. Yeah. I got tax returns too. I'm going to show you one day. I'm going to go all the way back then, and I'm going to show you some tax returns, just to motivate you, not for anything else, just to motivate you, because you can do it too. It's even easier for you today to do this. Easier. Yeah. Have I been to Australia? I had to cancel 3 trips to Australia, but I really want to go. That is something on my bucket list. And I'm a little scared because I believe that it might be so great for me. This is my supposition, that Australia might be so great, I may not come back. So I'm constantly thinking about that. Do I believe in the same concept of 3-phase day trading, or the trend has been changed? I don't know what you mean by 3-phase day trading. Elaborate for me. How long it took you to follow the process in those 6 years? Like I didn't, okay, so let's say let's call my developmental years 6 years, right? I would say that I started to see a little bit of light late in those 6 years. We're talking like 4.5 years maybe. See, here's the thing. When the light came, it really came. It wasn't like little and then went away. It was like once the light came, it was like boom, 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 boom. It just exploded. Now, I know that that's not how every trader develops. There are 2 ways to develop. There are multiple ways, but there are 2 general ways, and all of the ways fall under these 2 categories. This is an interesting topic. Let me explain to you. So you're either one in these 2 categories, and I don't know quite accurately if you can choose this. There's a side of me that thinks it's just intrinsic. You're either one of this group or the other. So let me give you the 2 categories of how you develop. You develop like a jagged line. So this group will be a jagged line. Like you see periods of progress and you're like, wow, I'm finally getting it. And then your trading says, really? Boom! And knocks you on your ass, right? And you're like, shoot, I'm not getting it. And then boom, another period, and you're like, I'm really starting to get it. And maybe that period's even better than the last one. And then boom, the market says, no, you're not. And you get knocked around. You have these long periods of darkness, and then boom, interrupted by a period of light. And you're like, yes, finally. And then when you get all happy, the market says, boom, no, you're not. What are you being happy for? And so I believe that the vast majority of people sort of fall into that category. That they have these brief glimpses of what is possible, these brief glimpses of who you can be in the future, who you're going to be in the future if you don't stop. But they're interrupted by these periods of darkness too that can really depress you and make you stop or quit if you're not careful. And I believe that the vast majority of people fall into that category. And then you have the second group, smaller group in my opinion. And God help you if you're in this group. This is my group. This is how I develop. No light. Listen to me. Complete darkness. You understand me? Zero. What I mean by that is you see no periods. You see no evidence that you can do this. You see no evidence that you should continue. You see no evidence that this can work. You see no evidence that this is viable. Zero. It's just 100% darkness. Zero light. Zero breaks in the depression, 0 breaks in the bad trading, 0 breaks, no reprieves. And God help you if you are in that category. Because that category requires something more. That category requires a level of insanity that the other group does not need. The level of staring absolute failure in the face And every morning waking up believing that this is my circumstance today, but it is not my reality. Do accept it. It's my circumstance, but it is not my reality. It is what's happening to me now, but it is not my future. When everything that's happening to you is proving all of your naysayers right, when everything that's happening to you proves more that your haters, your naysayers, the people who want to see you fail, when everything that's happening now suggests that they're right and you're not right for continuing, still stare it down in the face and say, I don't care. It's my circumstance, but not my reality. Circumstances change all the time. Reality does not change. What is real is real. Period. And so I don't know if my philosophy of you can't choose which group you fall in, I don't know if that's correct. Maybe it is. But I have a sense it is. I have a sense that you have no control over which type you are. But I do know that if you are that second type, or if you are the type that I was, you will have to be stronger. That group has a far worse time at this than the other group does. Do you understand what I'm saying? Tell me if you understand this story. I'm not looking at the comments here, so. I watched your video of 2001 where you mentioned the combination of things during the day and setups. Yeah, of course, I still believe that. I still believe in the three phases. The first part of the day and the last part of the day are the best phases to trade. The middle part, that's the black hole. You have to watch out for that. So absolutely, I believe in that concept. So, okay, so you guys understand? I'm glad you guys understand. Awesome. Oliver, my trades are 71 to 75% correct, but my brokerage is still eating my account. Guys, look, brokerage fees are reality. You have to find a balance between your level of activity to produce money and the cost structure of your brokerage fees, right? And if you can't do that, then you still don't have a viable business. So in a sense, it really doesn't matter what your fees are. They could be high, they could be low. You still have to find the balance. What's the proper level of activity? What I mean by that is, what's the proper number of trades per day that can produce way more than my cost, whatever that cost is. Maybe that cost is high, maybe that cost is low. Doesn't matter what it is. You have to make it work within your cost structure. And of course, you should look for costs that are less, but without sacrificing a great deal of quality. Because sometimes you have to pay a little extra for quality executions. All right, but you got to do it. Guys, my first professional trade, not the Lily trade I told you in 1981. My first professional trade cost me I bought 1,000 shares of Intel for $1,300. 1,000 shares, 1,300. And then to sell the 1,000 shares, I paid another 1,300. So before the trade starts, I'm $2,600 in the hole. So the stock, Intel, has to rise in profit by more than $2,600 before I make $1. Now, that transaction today would cost me 12 cents, 6 cents to enter, 6 cents to exit. That's crazy. 12 cents from 1,300 shares, right? Those are institutional trading rates. But whatever the cost is, I made those costs work. You understand? So you have to find your balance. Any advice for cryptocurrencies? Stronger and stronger supporter, stronger and stronger faith in the cryptocurrencies, especially Ethereum, you know, Bitcoin as well. There's some interesting new ones coming up right now, and some interesting developments to make it more like add banking services and things like that to the whole cryptocurrency market, credit cards and debit cards and the whole, and I like this movement. I like the movement. I also believe that the cryptocurrencies have the potential to be considered in the near future as an alternative store of value, and that's extraordinarily important. If that can happen, wow, for the cryptocurrency market. If that can happen, you know, but I believe it's a very good possibility. So what I mean by store of value, like cash is not a store of value today. Interest rates are near zero. Cash is trash. Do you understand what I'm saying? You can't hold significant amounts of cash. That's stupid. That's dumb. It's an eroding asset. Okay? You're getting nothing to hold cash. So then if cash is not a store of value, where do you store your money when it's not put to work? Where do you store it? You store it in things like gold. You store it in things like maybe the cryptos. And this is what I'm saying. Cryptos become generally accepted as another alternative, another store of value. Wow, you're going to see these things not only triple, quadruple, you're going to see these things go up 10, 100 times over time. So that's what I'm sort of banking on a little bit right now. So I know I wasn't a big fan initially, but I needed to see a crash, and we got a crash in them. So I needed to see that first, whether that crash would destroy. But, you know, after seeing the stabilization come back in, it's like, all right, now it's time. Now it's time. Oliver, I'm using your strategies to do weekly options positions on BABA, Netflix, NVIDIA, SPY, Qs, beautiful results. Awesome. Awesome. Way to go. Way to go. When you publish the video, when the things got clear, where your talk is like the Matrix. Oh my God. Right. Hi from Winnipeg. Thank you so much for your teaching. I'm so glad for your closet promise. Well, thank you. I appreciate comments like that, guys. A lot of work goes into these things, and sometimes it's hard, you know. But you know, one of my philosophies is to keep your promises. You know, so I got to do that. My camera keeps got to take that timer off the camera. All right. Your opinion on the printing of money in the United States? Well, that's a good question. Printing of money, and what this individual is talking about with the printing of money is the Federal Reserve's monetary policy. Now, guys, look, the Federal Reserve has several tools to stimulate the economy. All right, the first tool it has is interest rates. So, right, one of the first things the Federal Reserve will do to prop up the economy or to add a stimulus to the economy, sort of like inject it with fuel, all right, and send it higher. It has interest rates. So what it does is it lowers interest rates, right? And so right now we're at a zero interest rate state practically, and we're likely to go slightly below zero, which means that when you borrow money, you not only have to not pay as a business, you actually will get an interest credit. So not only will you not have to pay interest, you are going to get an interest credit. So you're going to be paid to borrow money. Now think about what this does for an Amazon or Microsoft or any company that wants to expand, to do things interesting, to build this, to go into this area, whatever. They can get money for free. Not even free, they can borrow money and actually make money because they borrowed money if interest rates go negative. They're called interest credits, right? Okay, so that's a powerful tool. But listen, when the pandemic hit, interest rates were already at zero. So the economy got destroyed. But the Federal Reserve didn't have its number one tool to lower interest rates because they were already zero before the pandemic. So now the Federal Reserve's like, holy shit. Okay, so they go to tool number two. You know what that is? We're going to print money to specifically buy assets. Now, what are those assets? So the tool number two that the Federal Reserve has is to buy assets, but they have to print money to buy assets. Where's the money going to come from? Right? So they have to create a supply of money, take that money and buy assets. What are those assets? Typically U.S. government bonds. All right? U.S. government bonds. Now, they also buy corporate bonds. So, for instance, corporations that have trouble during the economic downturn need help, issue bonds, and the Federal Reserve will buy those bonds. Now, what's a bond? It's basically a loan. So the Federal Reserve will buy the bond, that money goes to the company, all right, and let's say it's a 10-year bond. That company is supposed to pay the Federal Reserve back 10 years, but they're also supposed to pay an interest rate monthly, right? Interest rate bill monthly on the money that they borrow, but interest rates are zero, so they don't have to pay that. So that's tool number two. Remember, tool number one, lower interest rates. Tool number two, print money, buy government bonds. The government takes the money and does shit with it. All right. Print money, buy corporate bonds. The corporations that are having trouble during the economic downturn get a lifeline again. Wow, we got $40 million. Wow, okay, we can breathe easy, do shit with it, right? Number two. Okay. Those are the two most powerful. They have another tool where they set the reserve rate for the banking system. So when they want money to flow, the reserve rate is very favorable to banks. So that means that banks don't have to hold a certain amount of money in reserve and then lend out the rest over the reserve. So if the reserve is high, they have less money to lend out to businesses. But if the reserve is low, they have more money over the reserve they're supposed to have. Reserve, do not lend your reserve out. That's against the law. But anything over the reserve, they can. So the Federal Reserve can restrict money from the industry or expand money from the industry through that tool. So if they want more money to go to businesses, they lower the reserve, and now more money above the reserve is available to loan out. If they want to take money out of the system, they raise the reserve, and now the little bit above the reserve is available to lend out. So they have these three primary tools to kind of generate stimulus in the economy when it needs an injection, when it needs a jolt, right? I don't know if I'm getting too complex for the audience here, but this is a very interesting topic, and it's something I'm going to be talking to my wealth traders in more detail about, because I need them to really understand where we are in this monetary cycle, right? because we have knocked down one. Interest rates are at zero. Okay, that's gone. Can't go further below zero. You can go a little bit below zero, but you can't go infinitely below zero, right? So the Federal Reserve doesn't have that. That's gone. Interest rate movement is gone, okay? Second thing, they have been printing money and buying assets. And that is what is, now remember, when the Federal Reserve buys assets and prints money and lowers interest rates, there's so much money available in the market that it raises the price of assets. Stock market, assets. You understand? So why is the stock market not reflective of what's really going on in the world? Because of this monetary policy that's happening all over the world. It's not just the United States. Every major country is doing the same thing. They're flooding the market with money. Now, this money can't just go in the bank because you're getting paid zero. So where does it go? It goes into assets. Those assets raise in price. And so rising assets will ultimately, at a certain point, raise inflation, not immediately, but inflation will rise to a point where you can't keep the interest rate at zero. You got to raise the interest rate. Then the process starts going back the other way. You got to bring the dollar in because the dollar's high. You got to bring that in. That dollar being high hurts multinational corporations in the United States. Their products are more expensive overseas, and most of their business is overseas, a lot of these firms now. So they got to bring that dollar in, raise interest rates, and then the process starts reversing itself. That's where it can get scary. So we will be prepared for that, though, guys. We will be prepared. You stay close to me. Watch. You're going to see. Sorry for being so winded on these things, guys. All right. All right. Guys, I also want to let you know one last thing, and I got to go. I'll see you live in 8 hours, too. I'm going to go. I'm not going to keep you long. One last thing. I want you to think about ETFs and index mutual funds. For those, this is for the slightly more sophisticated people that follow me and understand these concepts, right? So I want you to think of index funds. Now I want you to think of how index funds work. It has to buy the stocks in the index. So let's say, for instance, that every week an index fund receives an extra $15 million into the fund. What must it do with that capital? It must buy the underlying stocks that represent the index that it represents. So if you have an S&P 500 index fund, this fund is designed to mimic the movements of the S&P 500, and it receives money every week. It must take that money and buy those 500 stocks in the exact ratio that they're supposed to be bought, right? So if there's all of this stimulus and all of this money around that's coming into these index funds, right? Coming into these index funds, they have to buy. So it's not smart buying. It's not buying because the price is good. It's not buying because it's smart. It's buying because I have to buy. We're an index fund. This can lead to some very bad things. Indiscriminate, stupid buying over a long time cannot last forever. No matter what the price these index funds have to buy, it's not based on research, analysis, price comparisons, buying cheap, selling high. No, it's just, I gotta buy. And when that unravels, we need to be there. Do you understand? I mean, I'm not trying to make you scared. I'm trying to make you think opportunistically. We have to be prepared to be able to rock with that, to be able to take full advantage of that. Oh yes, take advantage of the current reality, the current environment now, but also have your plan to milk this unraveling when it happens. And mark my words, it always does. All right? All right, guys. You understand what I'm saying? A little bit. I'm curious. I'm curious. I want to see who understands a little bit of what I'm saying. Sometimes I don't know if I should talk like this on these things, man. Love Ethereum. Yeah? Yeah, okay, I'm seeing some yeses. All right, cool. Seeing some yeses. Boom. All right, guys. Look, love you to death. Thanks for tuning in. You guys always show up for me. Thank you so much. Thank you so much. I'm gonna get some shut eye back to trading in the morning. I'm back. I love it. I'm back. Guys, I had family in town and stuff like that, man, and been a long time due to the pandemic. So I've been posting a little less and doing a little less. Just wow, it's been so long seeing some of my family members because of the pandemic and not being able to travel and this and that. So it was a great period for me and a good rest for me too, you know. So, but I'm back now. All right, so I'd come back in the beginning of July. So I'm back full force. Let's go. Boom, boom, boom. Get some rest, guys. Talk to you soon. Ciao for now. Love you. Love you. Thank you, by the way. Photoshop. Love you. Ciao.